So an angel investor that made a $25,000 investment in Uber at the very beginning would have turned that $25,000 into $100 million. That right there is a 4,000x return. And although that is not the most common scenario with angel investments, it is entirely possible. And that amount of money right there is a life-changing amount of money. $100 million means that pretty much you and everybody that you care about is set for the rest of their life. But there's obviously a lot more to angel investing in general, and there are some startups that are wildly successful while there's others that are not successful. And so as an angel investor myself and somebody who's invested in multiple different startups, I wanted to put this video together today talking about everything you need to know as a complete beginner looking to learn about the world of angel investing. Now, just to make sure that you guys are in fact in the right place here, this is what we're going to be covering in this video today. First of all, we're going to talk about how angel investing works and how people like myself and potentially you actually become angel investors. We're also going to be covering the step-by-step process you can use to get started with angel investing as a complete beginner. Even if you don't have any money yet, you can still begin learning about this and preparing for a time when you do. In addition, we're going to cover the two methods angel investors have for making money from their investments. So basically, how does something go from an angel investment to something that actually puts money in your pocket down the road potentially? We're also going to cover the exact strategies that I use and ones that you can learn from yourself on how I find individual angel investment opportunities. And we're going to also cover the 3 biggest mistakes that can end up costing new angel investors tens of thousands of dollars or more, all in this video right here. So in return, guys, I have a few small asks here. If you're watching this on your phone, that's totally fine. But if you're on your computer and your phone is next to you, just go ahead and put your phone on silent and go ahead and commit to the duration of this video here, because we're going to unpack a lot of information as well as firsthand experience. Also, I am not a financial advisor here, guys, and this is not any sort of financial advice. I'm going to be sharing with you my experiences so far as an angel investor, but you always have to do your own due diligence above and beyond the information covered in this video before making your own investment decisions. And this is merely here for entertainment purposes, showing you what I have done with my own investments. Also, I would highly recommend grabbing a quick beverage if you need one and a pen and paper, because we have a ton of information to go through here. I'm also going to be giving away a free pair of AirPods to somebody in this video. Stay tuned on that for more details. Alrighty, so let's start off here by talking about what is angel investing. Well, most of us are probably familiar with a show out there called Shark Tank, where entrepreneurs pitch a panel of billionaires on their ideas in return for equity or some type of business deal related with that company. Sometimes it's a royalty, but typically it is for an equity investment in that company. Now, I don't have a panel yet here that I sit on where I have people pitching me, but I do find out about angel investment opportunities primarily through my YouTube channel. And to be honest with you guys, real life angel investing is not nearly as exciting and fun as Shark Tank, but it is still something that I am excited about and that I love and am going to continue doing very heavily throughout the rest of this year and in the years following. So let me give you the real deal here on angel investing. We'll get all that Shark Tank, ideas out of your head, and I'm going to show you, the real details about angel investing. So first of all, an angel investor is somebody who invests in a very early stage company. This is not typically a company that is turning a profit. Oftentimes it is a total gamble because it could be a brand new product or a brand new competitor in a new market that they may have no track record in. It's largely dependent on the individual investment. But the key thing to understand here is that with angel investing, there's a lot more risk here, but correspondingly, potentially a lot more upside as we talked about with Uber. Now, in general, angel investing is very risky because failure rate for startups is around 90%. However, one thing I do to mitigate that risk is I only specifically invest in angel investments in certain industries that I'm familiar with and very confident with. So that's the general overview on all angel investments, but that may not be the specific number based on the industry that you're actually investing in. And the big risk here with angel investments is that if your investment doesn't pan out and the startup fails, you're most likely ending up with a big check for $0. It's very risky, but that is why there is such an incredible amount of upside with angel investing. Now, the reason why there's a potential for such a high return with an angel investment is because you're getting in at or very near to the ground floor of this company. Most of us are familiar with publicly traded companies, and these are shares of typically larger companies that have already had an IPO many years ago, and now they're publicly traded. And so this is a much later stage on in the life cycle of a company. With a startup, this is a brand new company, and they will be raising funding, and you will be part of that funding if you decide to be an angel investor. And whether or not this is obvious, the main reason why these can be so lucrative is because when you get into a deal at or near the ground floor, you're getting in on it at a much lower valuation. So with a startup investment, when they eventually raise funding, they're going to raise money at a set valuation. And that, if you are participating in the round, would be the valuation at which you are receiving shares if it is a clean and cut basic agreement. There's all kinds of different agreements with angel investing, so it does get more complicated than that. But if it's a basic agreement, you would be getting shares at the actual, valuation during that financing round. However, these rounds happen quickly, and you can oftentimes see companies quadrupling in value, if not more, between some of these valuations and financing raises. So basically, it's high risk. A lot of these things end up completely worthless, but if you have a big winner, it has happened in the past where people have had 1000x returns or more simply because you are getting in so early with this investment, way before the herd or the majority of the people can. Because if you're investing in a startup, it's not a publicly traded investment. It's a private equity investment into a small startup, and it's not something where you can just go sell your shares tomorrow like a publicly traded stock. These are entirely different animals here, and I'm not saying that you shouldn't, do one over the other. I do both. However, I do strongly feel you should have a good amount of investment experience and understand liquidity before considering angel investments. But we're going to talk more about all of that later on in this video. Also, another thing to note here, for those who may be looking for a passive investing experience, that may not be angel investing, because oftentimes angel investors are also bringing their time or their resources to the table, or maybe their connections. For example, with the startups I'm involved with, I'm a very active investor. I'm working on networking with them, and I'm helping them, to learn more about people that I know and contacts that may be useful. So I do a lot of networking and helping out my startups and doing what I can. So if you are in fact an angel investor, you may want to consider the fact that depending on the deal that you're in, they may be looking for you to help out with the company as well. But obviously it's going to be in your best interest to help a company that you're a part owner of, because the better the company does, hopefully the more money you'll make in the end if it has a successful exit. So now that you have a bit of an understanding on angel investing, and you understand it's not just Shark Tank or something that you've seen on TV, it's really more so a lot of analysis and basically helping these startups to make connections and grow their businesses. It's typically not a very passive investment, depending on how you approach it. It certainly can be, but the deals I'm involved with are definitely more active. That being said, I would now like to talk about the different ways that companies get funded, just so we have a better understanding. So first of all, there are 3 different types of companies out there that we're going to discuss for these purposes. First of all, online entrepreneurs, then there are small businesses, and then there are startups. Now, online entrepreneurs like myself really don't need much money or any money at all to start our business, and that is because we are self-funded. So I have my own business called Scribner Media LLC. I'm the only member, and I've never taken on outside investors, and I really don't plan to because outside capital would simply not help my business, and it's a very low overhead, content-based business. However, moving on to a small business, for example, like a restaurant, when they need money, they will typically go through something like the SBA, the Small Business Association, and look for something like an SBA loan. Now, small businesses sometimes will approach an angel investor, but it's definitely less common. You're typically not seeing small businesses like a restaurant or a cafe or coffee shop going out there and having a Series A or raising any form of money from equity investors. The category we're really focusing on here is the startups. Startups need to grow fast, and they typically can't get off the ground without savings from investors, whether it's themselves or other people. They need to hire people, invest rapidly in marketing, and gain a foothold in the market ASAP. So rather than doing that slow and steady approach like I did with my YouTube channel, they're really looking to pour gas on the fire and grow as fast as possible, get as much data as possible, and basically determine, is this thing a go or is this thing a bust, as fast and efficiently as possible. So they are competing with other startups that are all funneling money and burning money basically on marketing just to be as aggressive as possible. This is a startup, and this is what the majority of angel investments are, at least the ones that I'm personally involved with. Now, the first thing that a startup is going to do typically is have a friends and family round. And in those types of deals, you typically end up with something called a safe or simple agreement for future equity. I'm speaking from personal experience because I was actually a friends and family round investor for a cybersecurity startup called NetRise. I'll go ahead and throw a link down below to the other startups I've invested in as well if you guys are curious. But with that round specifically, I got in at the very beginning, the friends and family round. Typically after that, when they raise that initial money to get the idea started and get some marketing material and slideshows together for potential investors, after that, the next step is to go to angel investors. Now, thanks to technology, there are tons of different platforms online to help you with angel investing. And two that are very common are actually AngelList as well as Our Crowd. And I wanted to say thank you to Our Crowd for sponsoring this video here today. If you're interested in angel investing and getting in on the next big company before the public, that's exactly what Our Crowd allows you to do. Our Crowd allows accredited investors to easily invest directly into early stage companies without having to go out and scout deals on their own. Investors on Our Crowd were able to invest in companies like Lemonade and Beyond Meat long before they went public. And just so you guys know, investing in a company like that would be like the holy grail of an angel investor. Being able to get in on the ground floor of a company that becomes a successful startup and then has a successful initial public offering, and not to mention, those companies specifically have done well even after that IPO. The team over at Our Crowd does the professional research and vetting for you, so you can choose from the curated list of companies that end up listed on their site. And also, guys, just for my own personal experience here, I have decided to direct the majority of my money towards angel investing throughout 2021. I've already made 6 total angel investments, and I'm working on closing a deal right now, and I've put over $100,000 of my own money into startups. And in the future, I would also like to make a direct equity investment on Our Crowd. That way we can all track the investment together and learn from the overall experience. Whether or not you're looking to invest right now or down the road, Our Crowd has resources for everyone that are available for free right now. If you are an accredited investor and you're looking to invest, you can click that link down below and view live offerings instantaneously that could be potential investments you may want to consider. Or if you're not in a position yet where you're able to invest, you can still sign on with them and take advantage of the countless free learning resources over on Our Crowd. And of course, guys, Our Crowd is the generous sponsor of this video, and I really do love this company and what they're about. So if you do plan on checking them out, please do so using the link provided below, as they did sponsor this video. So hopefully if the video does well, they may want to do more sponsors, and that helps me to put more, comprehensive videos together like this that do take, many hours of research to put together. So moving on now, let's talk about how angel investors actually make money. Because at the end of the day, even though it is really exciting to help out with startups and be involved in startup culture, a lot of us are doing so with the motive of eventually making some cheddar. And essentially, there's only really two common ways that you're going to make money with an angel investment. But to better understand them, let's go ahead and circle back and talk about, again, how startups raise money. So as we said, initially, a startup usually begins with personal savings, then they may have a friends and family round, and then they would move on to a formal angel investment round through typically a Series A. But what exactly happens after that? Well, after the angels initially invest, the company starts needing bigger and bigger amounts of money, and angels are typically investing anywhere from $10,000 to $100,000 per deal. However, you will typically find much lower minimums for those deals over on Our Crowd, since it is a crowd-funded platform and there are thousands of investors all over participating together. So once you pass the friends and family and typically the initial Series A, and that company is growing and growing, well, so are their expenses, and so they're gonna need more and more money to stay afloat. So at this point, this is when you have venture capitalists begin investing in companies like this. And the average VC or venture capital fund is about $200 million. So these individuals are cutting typically much larger checks than your average angel investor, especially someone like me. Now, this gets a bit more complicated here, but it is worthwhile to note that at the point when venture capitalists are involved, angel investors are also sometimes able to add to their initial investment, like myself. So if there was a further financing round, I may have the opportunity to add more shares by basically purchasing back the rights that I had previously. And this is called having pro rata rights, and this essentially allows you to maintain your ownership percentage when the company takes on more money. So if you owned 1% of a company before, maybe after they raise more money, because it's a larger valuation and there was more shares issued, due to that dilution, maybe you only own 0.75% now. But in some cases, you may be able to add more money to the deal if you have it to bring yourself back up to that 1% allocation that you originally had. However, as mentioned earlier, unlike the stock market, angel investors can't just go off and sell their shares on a Wednesday on a whim. That's because the company is not publicly traded and there's no public exchange where you can transact or sell those shares to somebody else. Now, occasionally angel investors may sell some of their shares to somebody else, or they may offer them to somebody else in the investment pool, but that is very uncommon. Most angel investors are in it for the long haul, be it a $0 outcome where it's not successful or a potential exit. So speaking of exits, let's talk about now the two ways that you can make money typically with your standard angel investment. First of all, if a company that you invest in goes public, you would now be able to sell shares on the open market because it is a publicly traded company. So for those Our Crowd investors who got in on Lemonade or Beyond Meat, they would have invested earlier on, and then eventually when that company went public, they would then have publicly tradable shares of those companies that they could sell if they wanted to, or they could just hold on to them and let them continue to grow or go down depending on how that company does. But there's another way that you can have an exit from a private company, and that is through an acquisition, or if another company, be it public or private, decides to just buy out this other company. And typically, this is going to be a good payday for you if you are in an investment that is panning out well. Now, most angel investors are, of course, hoping for that IPO because that typically indicates the company has grown very significantly from their initial investment. Many angel investments are in companies valued at, $10, $15 million or less in some some cases. A number of mine were $25 million valuations or under. So these are very, very, very small companies at the beginning. So if they end up in an IPO, having a public offering in the billion-dollar valuation, you're talking about tons of upside there from where you got in initially. So the average IPO valuation is $1.5 billion. And so if you started off with a $10 million angel investment, that would be over a 100x ROI. That is, of course, why most angel investors are always crossing their fingers and hoping to eventually be involved in a startup that has a public offering. However, odds are against you because only a few hundred companies go public every single year, and according to the Small Business Association, there's around 627,000 new businesses started every year. However, the majority of those are, self-employed individuals like myself or online entrepreneurs, or like small businesses like mom and pop shops that are really never going to be doing a formal angel, investment opportunity because they're not looking to raise outside money. So of course we all hope to have an angel investment that ends up in an IPO, but it's largely up to things that you have very little control over, because when you're investing in a startup, in a company this size, they typically have very little market saturation or penetration. It's untested, unproven because of all of that massive risk. And that is why there is so much potential upside, but also a good chance of you zeroing out your investment and losing all of that money. But what I'm going to share with you now is my exact criteria for what I personally look for in my angel investments. The unfortunate truth is most people are never going to make a single angel investment in their life. And that's usually due to the accredited investor requirements, but there's ways to get around that now with certain licensing. So even if you don't have the income requirements, you can get certain licensing which would allow you to still participate in angel investments. So do not get discouraged if you don't have a significant amount of income or assets right now. Most people just simply do not have the risk tolerance or the appetite for the due diligence or the work involved with angel investing. Because as I mentioned, it's oftentimes not passive, and there is going to be some contribution on your part where you're helping for the overall betterment of this company. However, with that failure rate of around 90%, completing your own due diligence that is thorough is very important. That is why I'm a big fan of Our Crowd, because all of those deals are pre-vetted by a team. It doesn't mean that they're risk-free by any means, but it does mean that the deals that wind up on Our Crowd are pre-vetted, and they should have gotten the majority of those crappier deals out of the mix well before they end up on that website. Now, when it comes to making an actual angel investment, you can do this on your own, or more commonly, you're going to do so through a syndicate, which is what I have done with all of my angel investments. And as far as finding those deals, it's going to come from typically your own network, or you can look on online platforms such as Our Crowd. However, what I would recommend is just getting in the know on whatever industry you're looking to invest in. I would not recommend just blindly going out there and saying, hey, I want to invest in a startup, I don't care what it is, because as we said, 90% of these things end up failing. But if you know an industry well, and then you find out that, maybe a friend of yours is involved in a startup or whatever it may be, that's the more typical route that people go. And so for my personal experience here, all of my angel investments have come through YouTube collaborations or brands I've worked with in the past, and also just friends and family and people that I've met over the years. And I think that's the best way, unless you're going to go on a platform where you're going to find pre-vetted deals just to find out about these different investments. Because at the end of the day, there's always going to be more people looking for money than people looking to give it up. So if you're looking to do angel investments, you are the minority of people, and there's probably 10 people looking for every dollar that's out there. So just keep that in the back of your mind, that you are the minority, and that you should, be very careful with what you do with your money and make sure that you're not just blindly throwing it out there without any due diligence. Now, unfortunately, you typically have to make a name for yourself before startups are going to approach you. I do this YouTube channel, and some people watch it, so as a result, I do get messages from startups and whatnot, and I do get deals just inbound into my inbox. So that is where I get my leads from. That's probably not where you're going to get your leads from unless you are somebody who, people are looking to approach, whether it's based on your connections, influence, whatever it may be. So based on that, most people are probably going to be better off looking on a site like Our Crowd that is going to list out pre-vetted deals, where you can find deals that you'll be able to participate in versus trying to make connections and get in on a deal. It definitely is a very private investment. A lot of people don't even know about them, and you definitely have to be in the know often to find out about these different deals. However, I would highly recommend just getting well connected in startup culture, going to different events, and just meeting people and shaking hands and just figuring out, hey, who is this guy? Who do they know? And just good old-fashioned networking is your best skill to be a successful angel investor, in my opinion. But let's talk more about the accredited investor requirements, just because that may be a hurdle for a lot of people. Most platforms, including Our Crowd, are requiring you to be an accredited investor, and this means you have to have a $200,000 income for the last 2 years or $300,000 if you are married. But as an alternative, if you don't have that, you can satisfy this requirement by having a $1 million net worth excluding your primary residence. So if you can check off either of those two, you're most likely an accredited investor who could participate in these deals. If you're not, like I said, you can work on building up your net worth / income, or look into the licensing requirements that are required to become an accredited investor without the income aspect. Now, in terms of individual angel investments, the majority of my angel checks are $25,000 north, so you do need a sizable amount of money. If you have a couple $100, you're really not ready for an angel investment at this point in time. It is something that is going to take a much larger offering, so you do have to prepare for it. Also, as I mentioned, I would just personally say this is not for a first-time investor. You should have some experience with the stock market, understanding liquidity, before you get into something like an angel investment that's going to be higher risk with very low liquidity. And if you're not familiar, liquidity is simply how easy or difficult it is to convert that asset back into cash. Since there is no public exchange to sell those private shares, it's very difficult, and if not impossible sometimes, to liquidate shares early. Now, as mentioned earlier, my deals are through a syndicate, which means a bunch of different investors coming together, and we typically do those deals through a website called AngelList, and they are not sponsoring this video in any way. That's just a tool that we utilize. This is a pool of angel investors that often don't have the connections to source deals on their own, so they go in on deals together. They also may not have the capital requirements for some of these larger deals, so these syndicate deals are typical for smaller, up-and-coming angel investors like myself. Now, these deals can oftentimes require minimum investments that are a lot lower, sometimes as low as, $1,000 to $5,000, but again, you typically have to know somebody to even get involved in a syndicate deal like this. So that's how I find my angel investments, and that's how you can potentially find some yourself or just learn more about it in general. Now let's talk about what angel investors, including myself, look for in a startup investment. Pro angel investors will invest in less than 1% of the deals that come across their plate. That means they're saying no to 99 of them and only saying yes to one. There are 3 top things that most angel investors are looking for. Number 1, significant returns. The rule of thumb is a 7x return after taxes in 7 years. That's what most angel investors are looking for due to the amount of risk involved. They likely want to see some solid traction and evidence that the company is growing. And even if there is no revenue, they're looking for a growing base of highly active users. Most of these startups I've involved with have a big user base, and so we're watching maybe not so much revenue growth, but massive growth of that user base of people utilizing whatever the platforms are. Beyond that, another thing angel investors look for is a strong team. Many of the best angels out there invest based on the leadership of a company, not just the idea. When angels are investing, the idea still has a long way to go. And even if it's a great idea, if the management team sucks, it's probably going to go nowhere. And I've said no to countless deals so far just based on the people. I've oftentimes loved the product and I say, this management team, in my opinion, I'm not feeling it, and I walk away from the deal. So I strongly believe in that one as well. And then the last thing they typically look at is an exit strategy, just so they have a plan going into it. Angels want to see a return on their investment at the end of the day. They're here to make money. They need to be able to see a vision towards an eventual exit down the line, and this company should have good prospects. So typically what angel investors, including myself, consider is who might be interested in acquiring this company, assuming they don't have an initial public offering. And also, it's always good to consider whether or not you view this as a company that could have an IPO. If it's a company that's, in an industry where there's not many publicly traded companies, then, maybe that may not be the best idea. I personally invest almost 100% in the fintech space, and there's a lot of fintech startups that have gone public this year. So personally, that is why I really like this space. It's what I'm knowledgeable of, and that's the majority of what I'm investing in is fintech angel investments into startups. So that being said, guys, the last thing I want to cover here is a few mistakes to look out for. First of all, number one is putting all of your eggs in one basket. As we said earlier, based on the numbers, 90% of startups fail. So my philosophy is I want to make 10 angel investments over the next 2 years, and that's exactly what I said in my last video. That way, the idea is hopefully if that percentage holds true, even if 9 of those end up worthless, I will hopefully have one big winner. So diversification is an absolute must with angel investing. Mistake number 2 is allocating too much of your portfolio to angel investments because it is high risk. A lot of experts recommend keeping it at or below 10%. And so in most cases, unless you have an insane risk appetite, you wouldn't want to be hammering like all of your portfolio into angel investments. I follow something called a barbell investing strategy, which means I basically have a lot of low risk assets and a lot of high risk assets and not much in the middle. So that's what works for me, and you have to decide what works for you. Lastly, investing outside of your area of competence. I always recommend that advice of Warren Buffett, which is to only invest in businesses you understand. I understand the fintech space. I don't actually understand the cybersecurity space, so that one is a bit on a limb for me, but the majority, all of my other angel investments, in fact, are in the fintech space, which I've been involved with for the last 5 years. So I'm personally following that rule myself. But if you're a plumber, maybe you don't invest in a space startup if you don't know anything about outer space. That's basically what we're getting at here. So there you have it, guys. That is angel investing in a nutshell. There's obviously a lot more to learn, but you now know probably more than 99.9% of people out there. I've given you my criteria, basically what I look for in the deals, mistakes to watch out for, and I've showed you that even if you are or are not an accredited investor, how to get plugged in with our crowd, the sponsor of this video, if you do want to view live offerings right now as an accredited investor, or just take advantage of those free informational resources if it's something you're considering down the line. So thank you so much for watching this video, guys. Make sure you drop a like and subscribe as well. Hit that bell for future notifications. I'm also going to put links, as I said, to our crowd if you want to check out those deals right now. And I'm also going to put links to the other startups I've invested in if you're curious and want to check them out yourself. If you've never seen me before, make sure you leave me a comment and subscribe for those future videos. And lastly, guys, on the Airpod giveaway here, what we're going to be doing here is if you just leave me a comment down below with your favorite color, I'm going to be picking one person in the next 30 days, and you will be winning a free pair of the basic AirPods. I will be contacting you via the comment section, so pay attention. I'll just need your email, and then we'll handle all of that. And I will do an update video showing who the winner was. That way you guys know it's legitimate. And I am, in fact, giving that away. So there's the details on that, guys. Hope you enjoyed it, and I will see you in the next video.